Yo, what's going on, everybody? It's Wednesday, July 17th. Please like and subscribe. I'm asking you guys, I've been noticing that the likes and the subscribes have been going down. What's going on, guys? Come on, you don't like me? Please like and subscribe. It helps the channel. All right, well, we had another one of these divergent days today where Dow was up again. Yesterday it was up like over 700 points. Today it tacked on another 200 points. NASDAQ down. I think it was the biggest down day in 19 months. So a couple of things here. First of all, just to let you guys know, once again, as if I have to repeat this, I don't react to headlines and comments and statements by officials. I wait until actual policy is enacted, if that's what it has to do with, okay? If it has to do with, if it's a policy comment or something, I wait. I wait until that policy goes into effect. I don't react on some comment about maybe a proposed policy that's going to happen. It's like the same thing with this election. A lot of what's going on right now is they're calling it the Trump trade, okay? Because he's expected to be like, it's going to be like a landslide victory come November, and they're already saying, okay, there's going to be tariffs, there's going to be tax cuts, there's going to be this, there's going to be that. I don't know. I mean, one thing that I've learned about Trump from the last time he was president was that he says a lot of stuff. Some of the things he does, some of the things he doesn't do, or he does the opposite. So I don't know. I wait. And that also goes for the Fed. Like when the Fed, I don't even watch these Fed meetings that everybody gets all amped up about, and they're sitting on the edge of their chairs on pins and needles, and they're waiting for that statement at 2 o'clock. I'm probably out doing something. Okay, I come back, I say, okay, what did they say? And then I figure out based on my understanding. See, it all comes down to that. It's based on your understanding. Same thing with policy. If policy changes, if you understand the monetary system, if you understand, for example, government spending when it comes to fiscal policy, or if you understand monetary policy, not like these dudes, that we hear talking on TV who have no clue about the thing that they are so attached to, monetary policy, they see everything through that lens, and they don't even have an understanding of it. For example, I could give you a million examples, and like remember a year or 18 months, and they said, well, the Fed's going to start shrinking its balance sheet. Oh my God, and that's going to be horrible. It's going to create a crash. It's going to create a depression. You remember this stuff too. Well, the Fed did shrink its balance sheet by something, I think it's like 1.3 trillion in that time. And what happened? The market went straight up, and the economy is growing. Okay, growth has slowed down. And I've been talking about that, and the reason why there's a slowdown is because those net government transfers, the year over year, have been contracting. But the balance sheet, and that's another thing, because remember yesterday I said, I can't wait until this happens. I'm really excited. And I was talking about when the Fed starts cutting rates and what the outcome of that will be. And it's not like what you're hearing from the mainstream financial media or these talking heads or anything. But I said that with respect to the Fed shrinking its balance sheet. If you go back to the time when that started, which was like 18 months ago or something, I'd have to go back and look. I don't even remember. But I said that's going to be a positive thing. And I explained why. Because I said rather than the Fed sucking up all these high quality assets, government securities, okay, that's what it was doing when it was expanding its balance sheet, it was exchanging reserves in the banking system. It was putting reserves in the banking system as it took away government securities, which are tier one assets, the highest quality assets. The difference, and I call them cash equivalents, but the difference being those assets, government securities, they earn interest when cash doesn't, or at least it didn't when the Fed was starting to do that. And remember, the Fed was making 100 billion, 110, 120 billion a year in profits for itself. And that was money that could have been transferred into the economy if those assets were allowed to sit there. So I said, when the Fed reverses all this, it's going to allow those assets, those tier one highest quality assets, to accumulate in the economy, and that's going to distribute more and more interest income. So it was another one of those things where I said, I can't wait until this happens, and we're going to revisit what I said, which is what I'm doing right now. And I revisited it before, but so what? I'm going to repeat it again, that I said, even before it started, I said the hysteria over that, how people were so bent out of shape over that and thought like this is going to be the end of the world. I said it's actually going to be the exact opposite. All right. So anyway, getting back to the market today, we have this, a couple of things going on. The Trump trade I mentioned, and I said, I started out by saying, I don't pay attention to a headline or speculation right now on what is going to happen, because I don't know what's going to happen. When it happens, I'll take a look at it. I have an understanding of what it implies economically, and I'll, strategize my portfolio. And of course, I'll let my subscribers know what that's going to be. But right now, what's the point? I mean, what is the point? There is no point, because you don't know. We don't know. He's saying things, and maybe everything that they're reporting is going to happen. Maybe. But wait until it happens. Wait until it happens. So you have that going on. You have the Trump trade going on. You have the anticipation of interest rate cuts, which I said now the market is pricing in 3 rate cuts this year. 1 in September, 1 in November, and 1 in December. Okay, I happen to think that a lot of the bullish impact of those rate cuts is already being discounted into the market. In other words, the market is reflecting that, it's anticipating that. But when it actually happens, we still could get a pop off of that, because it does change financial structure, in a sense that financial assets, they're going to be reconfigured to reflect a lower interest rate. What does that mean? It means you might get another pop, So that's the second thing. The third thing is this rotation. Now, I talked about rotation a couple of weeks ago, and I said that's going to happen. I specifically have been saying, look at these smaller and regional banks, and I talked about this yesterday too. I said the smaller and the regional banks were really hurt bad with the Fed rate hikes, because their capital base was so diminished. I mean, they hold these tier 1 assets that I've been telling you about just a couple of minutes ago, government securities, which had to be marked down. They're forced to mark to the market, and that reduces their capital, and that reduces their lending ability, because, like I said yesterday, the only constraint on bank lending is capital. Okay, so when you have to mark down your assets, your capital base has shrunk, and you can't lend as much. So the cut in interest rates, when it happens, it should be good. So I talked about that in the context of market rotation. That was my idea, okay? At least out to you guys. But now it's like everybody's piling in. And it seems like it's getting a little bit frothy. I understand that there are small cap stocks out there with attractive valuations, where there's opportunity there. No doubt about it. By the way, just on a side note, on today's pullback in the NASDAQ, I did a little buying. I actually came in and bought a little NVIDIA. I had gotten out of my NVIDIA position a couple of months ago, too early, but I made a big profit on that because I bought it, when was that, like in 2023, or when it really crashed down to like, I think it got down to like 140 or 180. I forget the exact level, but it was real low. I got in and I sold it out before it split 10 to 1. I sold it out at 920. Now it's like at 120, so it's like 1200. So yeah, I didn't catch the whole thing, but I bought some back today, okay? This is what I always tell you guys, like you wait. Like the crouching tiger in the jungle, you wait for your prey. Or I've used the analogy of you go fishing. If anyone out there who likes to fish, you bait your hook, you cast your line out, maybe several lines, you sit back and you wait. Have a beer maybe or something like that, you know? So, and I'm here in Florida now. I plan to do a lot of fishing. I love fishing, all kinds, but particularly saltwater, saltwater fishing. I just love it, man. So like a crouching tiger, I didn't chase after it. You had a big 500-point drop in the NASDAQ today. You had a nice pullback. And I don't know if, look, when I buy, I look at levels. Okay, sometimes I get asked, like, Mike, how do you know when to buy? You never know exactly, and I never try to be, constrain myself to, I have to know the exact the exact level that I'm going to buy. Because I always say, the pursuit of perfection, it stifles action. What you want to be doing is taking action. Okay, that's how your life evolves, with action. When you sit there and you say, I gotta wait until it's perfect. I gotta wait until it's just right. You end up never doing anything. Look, I operate on the premise, I call it the Churchill premise, Winston Churchill. I just finished reading a biography of Winston Churchill. Winston Churchill made many, many mistakes. He was, I think, arguably one of the greatest leaders of the 20th century, okay? The guy was amazing, okay? He fought in 5 wars. He was twice the Prime Minister of Britain. Incredible guy, but he made lots of mistakes, and he was lambasted and criticized many, many times by his colleagues and his peers. He was kicked out of Parliament twice, okay? His philosophy was you make a decision and you let the consequences work themselves out. I absolutely adhere to this philosophy. This is my personal creed, my personal philosophy. Action, take action, no matter what you are involved in or intend to get involved in. Trading. Again, I'm going to give you the example when I used to do the live Forex courses. And my Forex course is available online as a video course if you're interested. But when I used to give the live courses, I would have, and many of you know this story because I've told this story many times. The students in the course, just at random, give me a trade, any trade, and I used to say, try to make it the worst trade you could think of. Any trade in the Forex market, any currency pair, okay? I had no idea what was coming at me, but I took it. And I showed them that even a bad trade, you could work out of it, or worst case, you get out of it with a small loss. I taught that, okay? I taught that. Totally random. I said, give me a trade, any trade. So this goes to this concept, this idea, number one, of action. You have to take action, okay? So I don't look I don't look for absolute perfection because we don't know that. We can't know that. Now, sometimes I have to say I get very close. And the reason I get very close is I look at, that comes from my floor trader background where I look at prior lows and prior highs. So if I want to buy, I'll put my buy order right below the prior low, an important low, let's say going back a month or 3 months or something, right below there, because I know that the weak people, the people who don't know, they're going to put stop losses there. They're going to sell out, and I want to be buying when they sell out. And vice versa. On the top, I put my sell orders right above an important prior high, because I know that the shorts, their stop losses are going to be triggered. How do I know? Because I spent many years as a floor trader, and we used to make money off of that all the time. That was like an ATM. That was like a cash machine for us. And as a matter of fact, we used to, on purpose, run those stops. Buy one lot. And the upstairs guys, they didn't know. They saw the quote on the screen. This is back in the old days when you didn't see volume. They didn't know if it was a 1 lot or a 100 lot order. And we trigger those buy stops or those sell stops. And then as soon as, they get flushed out, we go the other way. So that's what I use, okay? But even that's not a precise thing, although sometimes it gets me pretty close, at least as a short-term entry point. But I always try to keep enough powder dry that if I have to average it out. You see, I believe in this dollar cost averaging. Like when the market goes down, how many times have I told you guys you want to accumulate good assets over the course of your life? You want to get rich? It's not hard. I mean, this is an amazing country, and the stock market, I've said this a zillion times, is the greatest wealth creating mechanism that exists. Okay? The liquidity, the opportunities in there. Why do people not make it? Because they sabotage themselves. But if you just accumulate good assets over the course of your life, think about if they taught this in school. They should teach this in school instead of the garbage that they teach. I mean, this is practical information. People wouldn't have to worry anymore about whether Congress is going to do away with Social Security or whatever. And you can't live on Social Security anyway. But if you start young, I mean, you could really, really build up a fortune. Accumulate good assets over time. I remember... what's the guy's name now? He's deceased. It was Warren Buffett's Charlie Munger. Charlie Munger, remember, every year they used to give, or Buffett does now because he's the only surviving member of that duo, but they used to give their conferences and people would attend, the Berkshire Hathaway gatherings. And I remember one time Munger was asked by one of the attendees, like, when do you sell? It's easy, sounds like a very simple, straightforward question. And Munger was like, sell? Why should I sell good assets? I hold on to them. And, for me, it took me a long time to learn this because I came from a trading background as a floor trader. Like, I sold on the next tick. Never mind the next 5 minutes, or forget about even the next day. I was selling on the next tick. So this got so deeply embedded in my behavior. Like when I left the floor and I started to trade, like you guys off the floor or whatever. There's no floor anymore, but I mean, this behavior was still in me. Like I don't do that anymore. I concentrate on building up a portfolio of high quality assets, and I sit back. Like that fisherman example I told you, or that crouching tiger, and I just wait. NASDAQ down 500 points today. Okay, I'll go shopping a little bit. This is something every American consumer understands. They go shopping when it's on sale. What do we have going on right now? Prime Day, right? Amazon Prime. Yesterday and today. Why? Everything, on sale, free delivery, stuff like that. It boggles my mind that, American consumers are so savvy when it comes to this concept to buy on a discount. And they do the exact opposite when it comes to investing and building wealth for themselves. They chase up high prices and they panic out and they sell low prices. So let me sum up with what I think is going on right now. Look, we still have a drop. That drop, year-over-year drop in net government transfers, is still right around about 250 billion. So it's not getting better. It's not getting worse, but it's not getting better. So I'm still saying we're going to fall into a growth rate of about 1 to 2%, maybe closer to 2%, 1.7, 1.8, something like that. If that year-over-year drop in net government transfers worsens, then we're going to gravitate more towards 1%, maybe in the fractional percentage. That's still growth, okay? But that's not the kind of growth, in my opinion, that supports these levels of market averages. So in other words, what I'm saying, which is what I've been saying, is that the market looks speculative to me. Speculative meaning like, who's getting involved right now? I talk about this almost every day. I've been talking about this almost every day. I think it's people who basically missed out or were opposite in 2023. They were very negative and bearish, and they're coming into the market now. For me, these are not strong hands, okay? These are highly emotional. These are people chasing headlines. These are people who missed out on, and now they're reading and they're getting information or advice saying, oh, you got to go in now because everything is fantastic. I don't do fantastic when I buy. I do, remember what I said the other day, the time to buy is when there's blood in the streets. Anyway, I'm running pretty long here. Folks, I'm going to let you go. Don't forget, please like and subscribe. Why is the likes and the subscribes going down? I don't know. Let's try to boost it up. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. And that Forex course is on there in case you're interested. I'll see you tomorrow. Bye.